Well, DraftKings stock, oh my, we've got a lot to go through here. We've got to talk about the share price and we've got to talk about the earnings. The earnings were fantastic and we're going to talk about that share price movement. But I've gone through DraftKings earnings since Friday. I've listened to the conference call twice now, and every time, well, both times I listened to it, I went, this is such a good company. Like, it's the company that I look forward to that reports their earnings and listens to the conference call. It's the one that I look forward to every single quarter. And once again, DraftKings delivered really good earnings. And some fantastic stuff going on with this company, and I thought, you know what, let's break down these earnings, some of the key points that I saw from these from the earnings and conference call. So we'll go through this here. So first of all, great earnings, 10 out of 10. We'll go through them in a little bit. But first of all, we're going to talk about the share price movement. So when these earnings actually came out, I looked at the earnings and thought, they're really good. They're really, really good. This must, especially down at the prices that DraftKings is at, you know, it's nearly back at where it was SPAC prices 2 years ago. And I thought, you know what, there's so much negativity priced in here, surely we're going to see a bump up in the share price. And looked at the pre-market a couple of minutes afterwards, 10-20 minutes afterwards, and it started going up 5%, it was going up 10%. I thought, you know what, these are really good earnings. I reckon we could see a 20% pop on these earnings. Well, maybe not if we're in a bear market, but I thought, you know, normal market would have seen a really good reaction from these. And I thought, I'll just see how these open up, because I'd really love to buy some more shares, especially down at these values, accumulate more shares down at these sort of values. So I thought, I'll see what happens if it opens up. If it opens up pretty flat or 5% up, I might buy some more shares, unless it does actually pop, because these earnings really deserve the stocks to be a lot higher. Opened up, it was not too bad, but by the minutes that went on and the red day in general that was going on in the stock market, unfortunately DraftKings got pulled down the whole market, and by the end of the day it finished 9% down. So we went from a stock that was 10% up 9% down, and a 19% swing on the day, which is just unbelievable to see. So I mean, unfortunately, this is the market that we're in at the moment. There's a lot of negativity out there. There's a lot of fear out there. Any stocks that are a bit more risk-on stocks are not wanted, even if they do incredible numbers, even if they bring out really good outlook updates. You could do a triple B and it's just not wanted. So that's unfortunately what DraftKings was at. It didn't get much respect on the day. But however, I look at the long term, and these earnings once again just put DraftKings in a great place in the long term. So first of all, something that always take DraftKings for granted, the smash revenue again. I mean, they've done it so many times over the last few quarters. Once again, an absolute smash in the revenue, grew a lot faster than what was expected. Better EBITDA, the EBITDA was a lot better. Something that I generally totally wiped out. I thought, you know, the EBITDA side of it isn't going to be great. You know, obviously when every time DraftKings launches a new state, they need to spend on marketing. I thought with New York being launched, quite a competitive state there, I thought EBITDA is definitely not going to be great going into this quarter, and it was really strong, and that led them to actually raise their outlook. They raised their outlook on the revenue point of view, which I'm going to talk about in a little bit, because I still think that's got plenty of room to go, and they raised it from an EBITDA point of view, has improved that as well. It was quite funny as well is that they raised the EBITDA, and I think, I'm not 100% sure, I've not actually checked the numbers, which I should have done actually before recording this video, but I believe they moved it back into the guidance that the analysts were expecting in Q4. Now, if you remember in Q4 when they brought the EBITDA out and it was a bit lower than the consensus, DraftKings got absolutely punished with like a 20% drop on the day. Now, I think they've adjusted the EBITDA back to what it was going to be. The stock got no respect from it, and it was like, okay, so it got punished 20% for going back down to that lower guidance. They then put it back up, and then it's rewarded with another 10% drop, and that's when you just know you're in a stupid market where they could literally say that they've won the lottery and now they've got 10 billion in cash, and the stock would probably go down 20%. That's just the market they're in. But overall, ignoring what market we're in, obviously improving your outlook better than what's expected, improving the EBITDA obviously is really good, and they put that down to a few things which we'll talk on about in a little bit of a second. Next thing, monthly users were up, and that was increased by 29%, which is great, and average revenue per monthly active users was up as well, so that was up by 11%, and that is, so you've got more users coming onto the platform, and the users that are on your platform are also spending more on your platform, which is great, because obviously if you keep increasing that, then the users, you've already spent the marketing on the users to get them on the platform, and then if the users that are on the platform are sticking there and then using more money on the platform, obviously that's fantastic, and that's really good as well. I think it was something like $64 or something. So yeah, that's absolutely great. And this also comes from cross-selling, so you're also having, which they also improve the social side of the platform, so people are actually communicating, sharing whatever sports betting they're doing on the platform with their friends. As well as that, they can do this, obviously the daily fantasy sports, they can do the sports betting, and then the iGaming has always been kind of the weak side for DraftKings, and it's the part that they really need to improve on, hence the GNOG acquisition, which we'll talk about again in a second. I'm hopefully not going to forget all these things to talk about in a second, but yeah, so the iGaming is a part which obviously you normally have better margins on the iGaming, it's normally more profitable, and DraftKings hasn't really been good at that. That's why it's also bought GNOG. But then you're also going to have now the cross-selling, that you know, either your sports betting and then you also potentially do the iGaming, so that's also really good to see. Obviously, kind of what we knew a couple of days before, but the GNOG acquisition has gone through, which is great, because obviously then it's going to really improve the iGaming side of it, which has always been the weak side for DraftKings. As well as having the GNOG side of it, you get the advertising. So obviously you've got all the GNOG locations, the Houston Rockets as well. So you've got plenty of advertising places that you can be using that, and a database as well. A database of active users that you can also be advertising to as well. And also you add on to the board Tilman Ferretti, who's very experienced in this, and as he says as well, he's very much committed to the future of DraftKings. He thinks that this is going to be one of the market leaders, a tech company that is going to put in really good growth, and when it turns around and starts putting profit in, when it doesn't have to do a lot of marketing spend, because it's still quite early days, but it doesn't have to do as much market spending, then obviously the profitability will start ramping up, and it might get a bit more respect than what it is right now. So obviously the GNOG acquisition is perfect for DraftKings, because it has a lot of customers that it can advertise to, and also it improves the iGame side of it, which is massively needed to do for the DraftKings. It's always been the weakest part of the platform, which is great. So this was not also really included in the revenue and the EBITDA outlook, but obviously the GNOG acquisition will help revenue. At the same time, that will obviously which isn't there yet, we'll put a few more costs into DraftKings to integrate it and everything like that, and launch the GNOG states and get them up a little bit. There's also going to be an Ontario launch, which is I think it's like the 40% of the population of Canada actually live, and if it was a state in America, I think it would be the 5th largest. So that launch is coming in, I think they said the second quarter, which is good, because if you've been following DraftKings quite closely, you realise that a lot of people have launched in there, but DraftKings hasn't yet, and I was thinking, why haven't they launched yet? They said that really they could afford to kind of step back and not launch as quickly, because it was going to be a very competitive area, which does make sense, because when you look into that state right now, or the area in Canada, I think that FanDuel, who you would suspect to be very much in the lines of DraftKings, are struggling for market share. So I think DraftKings wanted to just sit back and see how that went, and judge how much marketing spend they should put in there, and there's no rush to kind of get in there, because it's already going to be quite a competitive area. So I think there was kind of just playing it a little bit safe and see what's going on there, which actually looks like a really wise decision. But it looks like that launch is going to be coming. They also mentioned a couple of potential other launches that come down the line. One thing that I was actually quite surprised with, actually, and I think this is something to really keep an eye out for, is that if the GNOG launch is going to happen, well, they acquire GNOG and expand it, and then they also expand into Canada, there's not much of that actually factored into the revenue in the guidance that they're currently offering. So obviously if there's any new state launches plus the GNOG and Ontario, when that launches, you could see this revenue get really hiked up throughout the year, which is very interesting to watch. Now, Q2 potentially, Q3 might not be too bad. Q4 is especially interesting one to be watching, because in that quarter we're going to have obviously we're going to have the NFL season coming back, but also the World Cup as well. So Q4 could be one of the biggest earning season for DraftKings. And one of the reasons why they have also hiked up their outlook with the revenue side of it, but more to the adjusted EBITDA side of it, Jason Robbins actually said it's because New Jersey, and I quote this, New Jersey has turned highly profitable. Now we know New Jersey has already been profitable, but now the words they're using is highly profitable. And it sounds like what we've always said is that as soon as it takes a year, 2 years for these states to become profitable, which they also said is still happening at a lot faster rate, it only takes a year or two for these states to get profitable. The long-term profitability in those states, and they start cutting that spending back, is actually getting the profitability level is getting higher and higher than what was expected as well, which is very interesting. So New Jersey, once again, seems like it's exceeding expectations on how much profit that's gone in, and the amount of profit seems to be one of the reasons why the EBITDA has been really improved, as well as some better marketing spend as well. But that was also very interesting to see that long-term profitability path is getting clearer and is even higher than what is expected. And also a little bit of a quote here from Jason Parks, the CFO, said, "It's very key to remember that there's going to be no additional capital needed for this business." You know, all the time you'll have negative people that come for DraftKings and say, look at the money they're burning for this much money. And the reason why is because they don't understand the business model. They don't understand how DraftKings works. They don't understand how DraftKings is going to get to profitability, and they don't understand how early it is. They don't understand how of a big TAM this is, and it's only just been created in the last 1 or 2 years. And the more these states come online, they're still going to grow at high rates, and very quickly they turn into profitability, and that profit will generate mass amounts as well while still growing. And he said as well, it's very key to remember that there's going to be no additional capital needed. He says as well that you've got to remember that this year there's going to be 10 states that contribute to profit, and then potentially you'll have some more in obviously 2023 that will start doing that. Now, because DraftKings is now starting to get to the point where through 2022 is that there's going to be so many states contributing to profit that when we get into 2023, we're going to have 10 states that are going to generate a lot of positive cash. Because they're generating a lot of positive cash, that will then cover the cost of launching new states, and they won't burn through that much cash, and they'll generate good amounts of cash flow in 2023. And that's what's the key thing. That's why the burn rate is still going to be quite high in the coming few quarters. In fact, Q2 should not be too bad potentially, but as the years go on, all these states that come online and start generating more and more positive and contribute to positive cash, then that is going to fund the states basically, and that's not too far away from happening now. This is what I thought, when I invested in a lot of companies, I need to see profit in the next 2 years. DraftKings will, in the next 2 years, get to that positive place where it starts generating it can get to a break-even point of view where it's not burning the cash, because them states will start funding it, the mature states, the states that have been around for them 1-2 years to get to profitability, and we'll have that base in the next coming few months, which is really good. So some really interesting comments there. So overall, I thought these earnings were fantastic. I'd give them 10 out of 10. I think they did really good again, did DraftKings. Unbelievable to see the share price go down. They basically reversed what caused a 20% drop on the last earnings, and it went down even more. So it just the negative market for you. So I'm obviously still holding my shares. I'm happy as ever, and in the fact that it's down at 52 close after these earnings, dropped 10% after these earnings, I'm just like, give me more cheap shares. I'll just keep buying them. Just keep buying them. If you want to sell them, I'll buy them. So I'll let you into a little bit of a secret. I did buy a couple more shares on Friday, and I don't normally update you guys that quickly, but I'll let you know that I did buy some more shares on Friday. So fantastic earnings. Hope you enjoyed it, and I'll see you in a bit.